Have you ever thought that you were fully covered until your house got wrecked and the insurance check was about half of what you were actually expecting? Yeah, that's because you didn't know the difference between RCV and ACV. Let's go ahead and fix that right now. Mike G, Delta Public Adjusting, and we've helped our homeowners recover millions from their property claims. Most people don't read their insurance policies, and I completely get it. Insurance is designed to be complex and convoluted on purpose. But understanding this one thing, RCV versus ACV, could save you tens of thousands of dollars. So let's go over ACV. Let's say your roof gets damaged and it costs $20,000 to replace. If you've got an ACV policy, big insurance is gonna say, well, Mr. and Mrs. Homeowner, your roof's about 15 years old. We're gonna depreciate that. Translation, they're gonna pay you the used value of your roof. I like to think of ACV kind of like when you sell something at a garage sale. Yeah, you may have paid $50 for that fresh looking G-Unit hoodie back in 2001, but good luck getting 25 cents and a couple of Red Lobster gift cards for it today. On an ACV policy, insurance is gonna pay you garage sale pricing. Now, sometimes the grass is greener, and that applies to the RCV policy, the replacement cost value. Let's dive into the RCV. Similar situation, roof is damaged, it still costs 20 grand to replace. But now, since you have an RCV policy, big insurance is gonna say, hey, listen, the value of your roof as it stands today is still only about $7,000. But because you have replacement cost benefits, we're gonna pay you the full cost to replace your roof today, which means you actually get the full amount back that it actually cost to replace your entire roof. Big difference, right? Now we're talking about big insurance and nothing's ever super simple with them, so here's the catch. Even if your policy's RCV, big insurance is typically gonna pay out the ACV portion first. They will hold back the rest until you prove that the work is completed. This holdback is called recoverable depreciation, and you don't get that unless you follow the rules of big insurance. That's why if you're a homeowner needing to file an insurance claim, just consult with your local public adjuster to make sure you're doing everything correctly and not leaving any money on the table. If you're shopping for an insurance policy, choose RCV every single time. It's a no-brainer. And if you've already got a claim, you need to find out what type of policy you have ASAP. If it's ACV, brace yourself, vaya con Dios. And if it is RCV, be prepared. You need to fight for that recoverable depreciation. That's money that's owed to you. So hey, I'm interested to know, what type of policy do you have? Do you even know what type of policy you have? Comment down below and let me know. And if you made it this far in the video, go ahead and hit subscribe. It's free 99, baby. And I'll catch you on the next one.